Hi everyone, this is Pete here. So today we're going to go through the latest market update for this week, and there are a lot of things that's happening this week that can potentially change the market. Alright, so let's dive straight into it. Okay, so if you look over here, previously last week we had a massive week. Massive not on the upside but the downside. The market has crashed about, I think, 4% in the whole week total, right? And there were many bad news, right? For example, last week was the S&P 500 worst week since 2023, right? Nasdaq also had a worst week more than 2 years. And right now, even though everybody is seeing that we're going to see a rate cut by next week, but the market is not reacting as it should, right? Because theoretically, when the rates is coming down, should see the stock price going up. But this brings me back once again, right? It's about sentiment, right? So guys, remember, sentiment is always the opposite indicator of where the market likely going to go, right? So if everybody already built in the expectations, over here it says 71% of chance of the rate cut, right? Then even if the rate cut were to happen, it wouldn't be a positive for the market, right? So everybody is very, very happy. The sentiment is very good, right? So this is generally not a good time to load up your position, right? Which is why previously at my subscriber community, Stock Market Genius, right, I've been telling my community that I've been offloading, I've been taking profit off the table, I've been raising up cash, right? So that is the very reason why I'm doing so, because a lot of times I'm a very sentiment-driven investor. I want to go in when the market is very, very bad, not when it's very, very happy, okay? So even Asia, right, we have very bad news coming out from Japan and China. But one good thing that we saw was that oil prices actually tumbled to its lowest since 2021, okay? And right now we are seeing the inversion finishing, right? So right now the 2-year to 10-year yield has stopped inverted. Now, this is kind of like a mixed news because there are reasons to believe that once the inversion finish, we're going to see a recession, okay? But the thing is, over here, we're not trying to predict what's going to happen about recession or not. It is not possible to predict, right? But what we want to do is to invest and trade what is in front of us, okay? So right now, with all these very negative news happening, actually, I'm feeling a bit more confident to enter into the market, okay? So previously, we saw that the sentiment back about 2 weeks ago when I talked to the community, right, was very greedy. And I was just telling everybody that, hey, you shouldn't be joining the crowd, right? If you join the herd, then you're not going to have an advantage. And true enough, the market started falling from there, okay? And from then, we saw that the sentiments slew towards neutral, right, at 53 points. And as of 10 September, which is actually yesterday, we saw that right now the sentiment has finally reached into the fear region, right? So this is why I'm getting a bit more itchy, right, to enter into the market. Okay, so if we look at the sentiment, you can see over here, previously it was very, very high at over 50%, and right now we are at 45%, okay? But I would say the fear sentiment is not as high as I want it to be. So there is still a bit more to be desired in terms of having a bad sentiment, right? Which is why I'm crawling into the market but not jumping in straight away, okay? Now, a few news over here. The market kind of had a 2 consecutive bull run day, right? Which is Monday and yesterday. Why is that the case? Because the August payroll was actually less than expected. Now, when we have negative economic news, you might be thinking that, hey, the economy is bad, we should have a bad stock market, but no, right? Because right now, everybody wants to look out for negative news so that the rate cut is definitely going to happen, right? So this actually prompted the market to have an upward reaction, okay? So we are living in a very strange world where a negative economic news actually drives the stock market, because everybody is looking at what are the odds of a rate cut. And if the rate cut doesn't happen, I can tell you that will be the sledgehammer that will destroy the market bull run, at least for a couple of months, okay? Now, so with that, we're going to see higher chance of rate cut. But one thing is that why I don't think the market is very bad right now, right? It is not the worst. It's because I don't think the market is oversold yet, okay? So if you look at the chart over here, let me just remove the words. You can see that on top, this is the S&P 500 going up, right? So we are periodically seeing all these retracement, right, happening, which is absolutely normal, right? But how do we know whether this retracement, right, is the bottom, okay? And we want to look at the chart below, which is showing the percentage of members, which is the S&P 500 stocks, right, where the price is below the 50-day moving average, right? So On top here, this is the average number. We want to see how many of them is actually below their 50 moving average. And you can see generally when we have a bottom-out event, we're going to see the percentage of stocks that are still above the 50 moving average at a very low percentage, right? 30%, right? 30% to about less than 20%, right? So that means the market is really oversold, which is why I don't think that right now the selling is over yet, right? Which is why I'm crawling into the market, not jumping in, right? Because we don't see that. Because the last round we had this little support here, we were also at about 30 region, okay? And in fact, the last support at about July, August period, the percentage was still below 50, I would say. Okay, right now, where are we? We are at about 58, close to 60. So I don't think that is the sign for us to really jump back in yet. So I don't think the market is oversold fully as of now, right? Which is why I'm still being a bit cautious here. And one news is that right now, Apple just announced their slew of item, right? Which is all their high profit item, which is including iPhone 16, right? Apple Watch, and also AirPods, okay? So over here, I would say the main thing about Apple that I think many people are misplacing, right? Right now, the concern is whether Apple as a company can revive the slump in Apple iPhone sales, okay? But to me, that is important, but not the most critical thing for the longer term future. Yes, in the near term, your immediate sales is important, but I like a company that is not just looking at near term sales, which is what the market is looking at, right? The market is always looking at near term profits, but they are foregoing the future growth, right? And what is the future growth here is that I believe Apple is a chip powerhouse right now. Okay, so hear me out. You may agree or disagree, doesn't matter. But anyway, full disclosure, I'm invested in Apple, and the funds that I'm investing for my clients under the Truffle portfolio is also invested in Apple. Okay, so let me just talk about why is it a powerhouse. Number one is that the latest A18 chip that is going to be in iPhone 16 is a 3 nanometer chip. Now, the significance of this is that right now, a lot of the chips out there are the 5 nanometer. And the frontier of this development right now is still trying to develop the 2 nanometer. So it's not out yet. And Apple is already right behind that frontier already. Now, the frontier is usually not a chip producer like Apple, Nvidia, ASM, right? It's usually the foundry, which is the TSM equivalent, right? The Samsung equivalent. And they are at just about developing the 2 nanometer, and Apple is already at 3 nanometer. Okay? And why is this important? Because from 5 nanometer to 3 nanometer is not a 40% improvement, right? Over here, it says twice as fast, 17% more memory space, right? In fact, they expect it to be about 30% faster than the previous 15 and iPhone 14 to be 50% faster at the same time using less power, right? And this fifth core is close to 40% and 50% respectively. So to me, this is Apple pushing the boundary in terms of chip development. And I can tell you, this to me is a really good news. Why? Because in the past, when we buy Apple phone, the Android guys, okay, will always say, yeah, you guys are buying Apple phone for the prestige. But if you talk about specs, right, the Android phones are usually the best, right? Way better than Apple phone. Apple phone is okay, but looks pretty. The interface is very nice, but not the best spec. But I think that statement is soon to be debunked because Apple right now is proving itself to be one of the highest spec phone right now. Okay, and I think that's a very powerful formula they are trying to develop. Is that they are not just driving profits, but they are saying that, hey, instead of just giving you a nice interface and a nice environment to work into the Apple ecosystem, we're going to couple that with the best hardware you can find out there. Okay, the best hardware. And this is very important because many of the non-iPhone, the Android phone makers out there, including their tablets or computers, they are not the chip producers themselves. They do not design the chip. They usually buy from Intel or AMD or what you have not, right? But Apple is actually designing its own chip. Therefore, is able to reap the maximum benefit to its requirement, right? Whereas the Intel, if they have any chip, you just have to buy whatever they have. So I think this right here is the future, whereby if Apple can really execute this very, very well, then Apple will dominate the space of phone. Now, I'm not saying that Android phone has no space at all, right? It will still be there, but the excuse of, oh, I want the best spec phone and whatnot is no longer valid, right? Once this comes into play, okay? And it's not just that it's becoming a chip powerhouse and pulling in front of everybody out there. Another thing is the new Apple Intelligence. Now, this I would say is an important part because Apple has been seen to be lagging behind, right? Your Microsoft, your Google, and whatnot in terms of AI development. And I think with Apple developing Apple Intelligence, it will be a very strong factor for Apple. Okay, why is that the case? Number one is that they would have the best hardware, right, that can run the AI on the phone. I don't know how many of you are aware that AI is actually very power and processing capacity consuming, right? It consumes a lot of CPU power. So therefore, Apple will be able to adjust its development, right, the chip to suit whatever AI needs that it has, right? So that vertical chain, I think is something that many people are overlooking and is really, really important, okay? So I mentioned that in my latest newsletter. For those of you who want to receive my newsletter, you can go to the description, right? I think that's the first link over there to subscribe where I put out my thoughts about all these earnings, okay? But I go into a bit more details here. What will this AI bring, right? Not just that it's a coupling between hardware and software, but another thing is that with Apple bringing this to its phone, it will also proliferate the use of AI, okay? Right now, I would say AI adoption is increasing, but it's not everywhere yet, right? Basically, your normal mom and pop will not be using AI unless they have a ChatGPT app or some kind of AI app in their phone, right? And most people are still Google searching, right? Searching on websites, on YouTube and whatnot. But with AI intelligence built into Apple, that means Apple is using its wide distribution chain to bring AI to people. And I think that's really powerful because it's not just about coupling the hardware and the software. Right now, Apple is able to increase the number of people using AI by a factor of percentage, right? And with that, they can amalgamate all this data they have collected from people and further improve their own AI, their own Apple intelligence, not artificial, but Apple intelligence over here, right? So I think this is yet to be seen, but I think if they can carry this out successfully, this is going to be amazing for Apple, right? So right now, I'm still quite bullish on Apple right now, okay? So for the rest of this week, what's going to happen is that today, we're going to see the CPI results coming out. The expectations is 2.6%. Let's just see how it goes. If it's higher, right, that means inflation is higher, then it's great news, right? Everyone is still expecting the rate cut to happen. But if it's lower, then you can expect the market to react negatively, okay? Other than that, we also have PPI on Thursday, and then we have consumer sentiments on Friday as well, okay? All right, next thing I want to share on market news very quickly is that there was this article about Nvidia stock, right? And it talks about valuation. And it's done by someone that I really respect, right? They call him the Dean of Valuation, okay? And I'm not going to try to pronounce his name too much, but I'm just going to say he's Professor Damodaran, right? Now, he has been put on the pedestal as someone that is very good at valuation. And right now, after his recent article, he values Nvidia at a price of $87, which is about 22% lower than its current stock price as of last Thursday, right? So now I think it's a bit closer, okay? So the thing is, I have great respect for him, but what I want to share with everybody is that every time you're out there reading such news, and before you have a very big reaction and say, oh, that means Nvidia is very overvalued, too expensive, let me just sell it now. Put it through a thought process before you react, right? So it's very important as an investor to think carefully first before you react. Now, number one is that, firstly, you must ask yourself, how did Professor Damodaran came out with this valuation, right? It's probably some form of discounted cash flow and discounted earnings, right? I have to go and read deeper, but to me, it's the method to reach there, it doesn't matter. To me, is the arrogance that you are able to put down a dollar value to the very last dollar of a stock price, right? Because the truth is this, I'm pretty certain if you ask the CEO of Nvidia right now, Mr. Jensen, right, what is the Nvidia share price, and he himself as the CEO and the executive chair, he should know, right? But I'm pretty sure he doesn't have a figure in his mind. Why? Because nobody does, right? Nobody is able to predict the share price of a specific company, in this case Nvidia, to such precision. Okay? So to me, this number is almost invalid. To me, a valuation is always a range. Why? Because it's always about roughly what is this worth, right? In fact, you just ask yourself, everybody has a house, right? Regardless whether you're renting or you own the one that you stay. And whenever I do my property consultation with my clients, they will always ask me, Pete, how much do you think my house is worth? And I always say, oh, maybe it's between 2 million to 2.2 million, right? Nobody can give an exact number. In fact, you yourself staying in your house, if I ask you to give an exact number, you will not be able to give a specific number with high level of confidence. Okay, so this is where I want all of you to be very careful. And in fact, okay, right, this is not the first time Professor Damodaran has given a number, right? In fact, he said that there is still a disparity right now of 22%, but it is slimmer than the one last year that he gave, right? That means he actually gave even lower valuation last year. But guess what? Nvidia has been climbing, and now he's bringing up his valuation a little bit. So guess what will happen is that he's going to give a valuation. I'm going to draw over here. He's going to give a valuation. I'm going to draw in blue, right? And he's increasing slightly, right? And where is he increasing to? Basically, he's increasing to where Nvidia is trading right now. Okay? So how is this a form of prediction or valuation? Because guess what? Eventually he will be correct, right? He just need to eventually climb, increase his valuation until it becomes the market price. So I'm not saying that he is not a good valuation person, right? He's still the dean of valuation, but I just want everybody to be very careful out there that even so-called experts out there can give what I call investing mistakes to give such specific number out there, because nobody truly knows. Okay, right? So why is the case? Because you need to understand the difference between these two factors as an investor is between accuracy and precision. Okay, you might be thinking, hey Pete, they are the same one, right? Now, they are not. Okay, so when, for example, this is a arrow chart, right? You're shooting an arrow. If you're shooting to the center and all your shots fell in the center, then great, you are both accurate and precise. Okay, right? You're both accurate and precise. But if you are shooting the center and your shots are still falling, a bit to the left, a bit to the right, right? But more or less in the center, right? Then guess what? You are still accurate because you are hitting the bullseye. But in this case, we will say that you are not precise, right? You're not precise at all because you're not specifically in one spot. You are a bit dispersed. Okay? Another way, of course, is if you're trying to hit the bullseye and you're not hitting the bullseye and your shots are all over the place, then you are both not accurate and not precise. Okay? But I think what is happening right here for Prof is that he's being very precise. That means his shots are actually very close to each other. However, he may not be accurate, right? He might be off the ballpark. Maybe the true valuation of Nvidia is 100, right? So this is the true valuation, but he's off by maybe $20. Okay? So he's not accurate in this case because he might be missing the mark. So I think in the world of investing, what you want to do is, of course, if you can be accurate and precise, that would be the best. However, most of the time, as an investor myself, I'm not trying to game for this because this is almost impossible, right? This is like you very precisely valuing a company to the last dollar, which it doesn't make sense, right? It's so hard to do that. What you want to do is in this second box, right? Whereby I don't need to be very precise, but I want to be roughly accurate. Okay? And I think there was a saying by Charlie Munger. It says, he says something along the line of, I don't want to be precisely wrong. I want to be roughly correct. Right? So in this case, I hope that everybody, you can strive to be in this quadrant, in this box, right? That you don't need to be very precise with your valuation, but you need to be roughly accurate. Okay, so my commentary right now is that for many of the stocks, in fact, those stocks that I mentioned in my subscribe community, Stock Market Genius, I don't think a lot of them are in good position and good setup to do yet, right? So what I'm personally doing right now a lot is selling what I call out of the money puts. That means they are very far away puts, okay? Or I'm just buying shares in bite sizes, and I'm holding about 30+% cash right now. Okay, so that's my market commentary. I hope you find this useful. And for those of you who are subscribed to my Stock Market Genius community, I will publish my specific ideas in the SMG community. Alright, so if you like the content over here, if you like what I share about the market, do like and subscribe, and I'll see you next time.